Hey everybody, this is Jim at sp500chart.com. I'm coming to you on just a little bit before noon here on Memorial Day, and I just want to remind you, if you are from the United States, not everybody who subscribes to my service is in the U.S. But if you are, just remember today those people who gave their lives so that we could enjoy the freedoms that we have. And I just want to say one more thing. Don't take those people for granted, and do not take your freedoms and liberty for granted. As soon as you do, someone will be trying to take those freedoms and liberties away from you. And if you ask me, we're already and have been in that process for a long time, but it's a continuing thing, and it is now an accelerating thing. Your freedom is more important than any amount of security the government can promise to you. Your personal freedoms should always trump government security. So anyway, hey, I'm off my soapbox. Let's take a look at the chart after I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts and gives these little short political stump speeches from time to time. So let's take a look. Okay, we're starting off today looking at a 4-day chart because I want to try to bring something home here, and that is, we've been talking a lot about, are we at a top? Is a top forming? And I don't see a top formation right now. Back here in 2007, and in early 2008, we had a top. And did we? But let me ask you this, and I'm just saying this because I want us all to have a realistic outlook on what technical analysis can and cannot do. When the S&P got up to 1,500 and change back in the summer of 2007. Did we know that was a top? Well, you might have suspected it because that was very close to where the S&P had gotten back in 2000. But just from looking at the action, from the lows that were in place back in the 700s before that leg started up, I don't think there was any way you could say, well, this is a top. We didn't really know it was a top until early 2008. That was when the top broke down, when important when important support levels got taken out. That's when we saw the top. So the goal of technical analysis is not to sell here and buy here. That is, I think, an extremely unrealistic ideal to hold. You're not going to get the top. You're not going to get the bottom. Now, did somebody say this was the top? Well, of the tens of thousands of people on the internet who say they're stock analysts, of which I would include myself, yeah, someone got it right, and the reason is because there's tens of thousands of us. Someone's going to get it. Did someone call this bottom down here? Yeah, someone got it right. Is it because they were extremely skilled? Well, perhaps. As I recall, this was an important retracement level. But that aside, what I'm trying to let you know is to say that you're going to try to call this top and then buy this bottom, you're probably going to do yourself more harm than good. Because you might have been calling this top, oops, no it wasn't. Or this top, oops, no it wasn't. Or maybe This was bottom. Oops, no it wasn't. Well, this was bottom. Yeah, it was. Nope, no it wasn't. So what we try to do instead. Okay, I got interrupted there just for a second by my son. But anyway, look, what I'm saying is the goal is not to get the top, and the bottom, but rather to recognize that the top is broken. Now it's time to either short or be in cash. And you're not going to get the whole big move here. But had you gotten out of the markets after this top broke down, either right at the point of the breakdown or on this pullback, then you would have done quite well. You would have been out at 1435 from a high of 1570. I mean, you're looking at it, you say, well, that's a 10-point difference. Yeah, but you didn't suffer through all this. And then what if you had waited for the bottom to come in and you'd bought the S&P at about 960, or I think the breakout level was actually at about 980. Well, if you'd done that, then look at all of this nice, all the nice gains you would have had. Additionally, we had patterns all along the way here, but now we don't. So that's just a long-winded way of saying be realistic about what technical analysis is capable of doing. There are times when you're going to be able to nail a bottom, but there are also going to be times when you just can't, and you have to recognize that. And the same thing goes with tops. Okay, moving into a much shorter time frame now, looking at a 30-minute chart, and I'll remind you that each candle on this chart is 30 minutes of trading. And we've been looking at this green channel that developed in in the middle of April, coming off the lows of April 19th and just trucking right on up, with the idea that when this lower line breaks, that should be setting up a downward leg. Now, the last downward leg we had was leading to that April low, and that was only 1, 2, 3, 4, 5, 6 days of overall selling pressure. We had an up day here and there, maybe within this, but the idea being that the downward channel took 6 days, and then we broke out, made this little inverted head and shoulders, and then headed up into this green channel. Last Friday was our second day being underneath what used to be a support line. That is important. I believe that means we can look at this line now in the future as being very likely resistance. Additionally, just kind of interesting, I made the comment that this little blue line that lined up these bottoms back in early May, I said I didn't know whether this trend line really has much going on with it, but it is just kind of interesting that that on Friday the rally got stopped at that line twice for whatever reason, and I can't really tell you why that is, but it is certainly interesting. So right now, I would look at this as being resistance, and I would look at this yellow line down here as a potential area to bounce, but an even stronger support line, I believe, would be our red line right here. That was kind of a neckline in an interesting pattern that really sort of defies description. Call this maybe a cup and handle or whatever. But this was really the line that once it broke, and by the way, this is that long-term tops line drawn over the 2000 and 2007 S&P 500 market tops. Once that broke back here in early May, then that really, I think that was a legitimate break over this line. So I would look to this line and say, I would suspect a bounce here. If for some reason there is not, then we got another level down here right around 1540. But guys, since we do not have a for real pattern that we're looking at, we don't have a head and shoulders, we don't have a triple top, we don't have a double top, we don't right now have really anything. I guess there's a potential of a broadening pattern up here, but we're not quite there yet. If that were the case, then I would look to these two lows to be two parts of that pattern. But I think that's very premature to speculate on that. Now, if we came down to this level, then bounced, then you could say, well, let's now watch this line as being technically important. But right now, that we're not there yet. So let's just get rid of that. As far as the week went, well, I've been expecting some selling for a long time, and I think I've probably, well, what's a good way to put this? I don't want to say, I've always had this little caveat going into these past few weeks that, a down leg is going to start. I just don't know when. And this week we did get, this past week rather, we got 2 days of slightly up. Then we really kind of gapped up on the 22nd, and then immediately started to give that back. And that line up here was the top resistance line in our rising channel. That's where this selling started, and the selling ended up taking out the support line of this channel. So for that reason, we're really in the same spot that we were in the past weeks as it relates to the chart, and it's basically this. If there's a line above wherever the S&P is trading, you can look to that as likely resistance. If there is a line below, you can look to that as likely support. I don't know that we always get this happening this way, but since we don't have any pattern that tells us to expect 1540 or expect 1600, all we can do is rely upon the trend lines. So, we did end up identifying this little, what appeared to be a bear flag on the 23rd that broke down on Friday, and now we've started this little eking up slowly and slowly. Let's see if rather Tuesday. I'm doing this on Monday. It's a holiday. Let's see what happens on Tuesday. This line may not be that important, so I don't know how much faith I would put in this line strongly turning the markets back down. It would not surprise me to see a rally and then see the markets sell off a bit more. This sort of looks like there's a willingness. Here we gap down and then we traded up. Then on Friday we gap down, I think we traded up. It obviously there's weakness in the market, but throughout the day, throughout the session, it seems like there's a real willingness for buyers to come in and pick this market up. So with that in mind, we see that they came in at about 1636 on the 23rd, and they came in at about 1637 on the 24th. Just for jollies, let's put a little line here, and let's say if that line breaks, then that would almost certainly be setting up that move to about 1620. And if we do not get a bounce there, then we would be setting up a move to test that breakout level of those of that line that is the trend line drawn over the 2000 and 2007 tops. And I could there's a kind of a nice symmetry to that, is that we got up to the high 1680s, then we shave off 40 points, we hang around in the 40s, and then we break 1640 and shave off another 40 points. That would not surprise me. But let's watch this as a trigger line. And again, this should now be resistance. This could be support here, support, and support. Other than that, I wish I had a pattern where I could say, look forward to 1540 or look forward to 1480. But nothing like that exists yet. I think it will eventually, just not yet. So there's your Memorial Day weekend chart analysis. You know, I'll be honest with you, I feel a little bit lost at sea without a recognizable pattern, because we've been spoiled for years as we've seen patterns develop in the markets that we can draw a reasonable conclusion from. Right now, if you got something to share with me, please do. But I just don't see anything that is of a significant size in the chart that tells us we should be expecting a move of 5, 8, 10%. I just don't see it. So again, eventually it'll be there. But right now, I'm not finding it, so I'm not going to make something up. Hey, thanks for watching. Take care and enjoy the rest of your Memorial Day.